The following is a presentation of TFNN. Trade what you see with Larry Pesavento. Call now, toll free at 1-877-927-6648 or internationally at 727-873-7618. Now, Larry Pesavento.
Okay, folks, looking good, Billy Ray, feeling good, Lewis. Back in the saddle again, as they say here in the trade. Certainly enjoyed the week off. Folks, I needed that week off because I really had so many things to do, and part of it was we were getting ready to start to see this incredible volatility that we saw last week, and we're going to start seeing it just about every week from now on until something really, really dramatic happens and the baby goes out with the wash. I don't know when that'll happen. If it does, I don't know. We're just having tremendous swings, and it's really difficult, to try to stay up all night, catch some of these things, and then, try to do it all day long. So I've got to pace myself the best I can because I don't see this much volatility with such great patterns. I mean, we see them all the time, but not with the volatility, folks. I mean, look at the volatility that we're having here in the S&P. I mean, this is just incredible. Tommy talked about it on the show a little bit before, but I just think if you take a look at what really happened here on Friday, I mean, just one picture is worth 1,000 words. Just take a look at this, folks. The S&P dropped basically 47 handles in 10 minutes. Now, any market that can take that away from you can give it back, and that's exactly what happened today. We went right back to those highs. Starting last night, we gapped up about 8 or 10 points. We got up to be about 40 handles higher, I believe, right back into that same resistance area at 38.59. Now, we could easily get above that. With the Dow up 300 points this morning, we could have one of those days where the Dow is going to go up 400 points. But the volatility is coming in at such a fast pace, folks. We have to really be ready for it. Those of you that belong to the 24/7, I told you on the video last night, or actually it was Sunday morning, to lower your stop down on the Dow Jones so that you lock in at least 800 handles, and that one turned out to be pretty good. We gave some of it back, but it was still a good one. There's more to come. Whether it'll be today, tomorrow, the next day, we'll have to wait and see. But right now, we're waiting to see that unfold as it goes through the next leg in here. But we're far out of the woods yet, folks, of being a new bull market yet. We're just grinding at these levels that are very, very important. And if you watch them, it's going to be quite spectacular as you see it. Now, I wanted to bring to your attention something that happened way back when I first started at TFNN. I want to get this up here. This is I started in 2007, October of 2007. This was the Dow Jones Industrial Average, folks, going into March the 5th of 2009. You can see the big ABCD pattern that was there. You can see you had a perfect Bradley date coming in here, just about spot on. And I said at that time, we had been down, folks. The low on that Dow was 6,400. And I said we're going to have the biggest rally that we had since 1938. And of course, we're still rallying. And anyway, that was one heck of a rally. But it's important to watch it. And I'm not too much interested in the Bradley model because sometimes it works, sometimes it doesn't work. But when it lines up with the patterns, it's really important to pay attention to it, in my opinion. And that, believe me, that's just my opinion. So, like I've always said, if you pay more than 2 cents for it, you probably overpaid. But that's why the Bradley model looks so interesting. Now, we've talked about that big pattern that we had in the Dow Jones, the big butterfly pattern up there at 32,000. We've gone through that without, too much trouble. So we need to look at a couple things here related to that. And one of the things I had our good friend Shane Smullian, who will be our guest on Wednesday, he ran the Bradley model for me over the weekend just to show if there was any correlation. And as you can see here on the top there, on February the 10th, that's when the Bradley model, started to roll over. Now, what we've done now is we've settled down here. You see 38.09 on March the 1st. That was where we settled on Friday. We rallied up last night to, I believe, 38.60. I believe there should be a lot of resistance at 38.66 if we get there. But if this is correct, this tells us that we could have a 3 or 4 week correction into the end of March. And remember, we've got the equinox coming in. The spring equinox comes in here in about 3 weeks, where we change times on the 14th, folks. We go to daylight savings time, which is always fun here in Arizona. So we get to start a little bit later, which is good. Okay, let's move on to couple other things that are very, very important, and I think everybody's watching it. I sent a video out on this, of course, when we on Sunday. I sent so many videos out because there was so much stuff happening that I really had to pay attention to it. This was one that we were looking at while we were on Monday's show. Excuse me, on I wasn't on last Friday, but I sent this video out last Friday as the market was making. I said cover all short, gold positions down at the 1720 or better level, and we got those were filled under 1720. Last night we rallied all the way up to 1359. Now the $64 question is, are we going to go down one more time, or do we bottom right here? Boys and girls, I wish I knew the answer to that. I don't know, but I want to be as patient as possible here, because this is one pattern that if it unfolds, this is going to be what we call this is going to be a big one. So I'm going to post this for you now to take a look at it. And you'll be able to see here that the number we're looking at, you see $1,673 an ounce. Okay, that's a 61% retracement of the low from March of 2020. But more important than that, folks, it's a 382 retracement of the low that was made back on December, the last week in December, when we were making the 3 drives to a bottom pattern at 1,050. Actually, the low was 1,038, I believe, and that will be an exact 1673. Now we're trading here about $60 an ounce above that right now, and we could easily do that. I mean, if we swing $50 like we did on Friday, we could easily see something like that again. So those are the main things that we're paying so very, very close attention to. But there's a couple others that I think that are very important, a couple of charts that I think are very important, that we've been talking about this gold market for quite some time, and I'm trying to I know I have it in here because I spent a lot of time getting this little puppy ready, and I do not see it, and I cannot find it. Where did it go? It's the GDX, folks. That's the gold, silver mining index. And when we get back from the break, I'm going to get in and show it to you, because it's important enough to pay attention to, because we're setting, spot on one of those things that looks just absolutely beautiful as far as a target being met, and we're trading it. We closed at 31, folks. That was the number we were looking at 30.5. So we're within a heartbeat of that. So pay attention to that. But we'll take a look at that chart when we get back. 877-927-6648.
Golden ratios give shape to everything in our world, represented in the Fibonacci sequence. These special numbers define the patterns that make up our universe. Not even markets can escape the omnipotence of these ratios. Larry Pesavento is a 45-year market veteran who has published nearly a dozen books on the powerful patterns we find in nature and their relationships with the ever-elusive markets. Larry's newsletter, Fibonacci 24/7, will teach you to harness the power of these natural golden ratios in order to create successful trades. Fibonacci 24/7 is designed to teach the tools you need to identify and act on these undeniable and reoccurring patterns. Sign up for Larry's newsletter, Fibonacci 24/7, and you will also receive free access to his trading webinar, Trading Strong Trending Markets. Try out Larry's newsletter risk-free. All of TFNN's newsletters come with a 30-day money-back guarantee. TFNN, educating investors.
If you're not currently using the TAS Profile Scanner when looking at setting up your trading opportunities, then your arsenal is short a mighty weapon. The TAS Profile Scanner is a standalone piece of software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Headed by Steve Dahl, TAS understands that in today's technological world, the use of top-flight software applications and technical analysis expertise is essential to successful trading in today's market. You also gain access to the webinar that Steve Dahl and Tom O'Brien just hosted, The Best Way to Use the TAS Profile Scanner to Profit. This webinar archive is available for all subscribers immediately upon signing up. All new subscriptions also come with a 30-day money-back guarantee, so you have nothing to risk. Start your subscription by visiting the front page of TFNN.com today, and you'll find the TAS Profile Scanner under the Services tab. Sign up today.
Hey there, I'm Andy Arbertine with Tiger Precious Metals and Stones. Whether you're looking to buy and sell precious metals or trying to find the perfect diamond ring, I'm here to help. I have over 15 years of experience with diamonds and precious metals. You can call me directly at 727-329-8245, and I will personally answer any questions you have and help you find exactly what you're looking for. I will be your personal concierge in the metal and stone business. Give me a call today, 727-329-8245.
Many of our new listeners have heard about The Tiger's Den. The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of the TFNN shows, plus see all of the charts as they happen live and have access to archives of all of those charts. You can test drive The Tiger's Den absolutely free for 30 days and greatly enrich your knowledge of these markets and how to make your money work for you. Details on The Tiger's Den are on the front page of TFNN.com. Call now, toll free at 1-877-927-6648. Internationally at 727-873-7618.
Okay, we're back, folks, and we've just posted a chart of the GDX. It's a gold silver miner index. As you can see here, we're very, very close to the target, just right below $31. I don't know if we're going to get there today with the market, gold being up. Well, gold's up slightly, but silver's still up, but we could be right at the bottom. My game plan here is to wait. I want to give it another day or two to see if this is going to be the bottom that we're looking for. If we get to 1673, you literally have to, if you believe in patterns, and we certainly do here at TFNN when we're looking at these patterns. So you've got that multiple ABCD coming in at 1673 an ounce, and we also have the 382 retracement and the 61% retracement. Three major things there. So that's what we're going to wait for. Might be off base here a little bit, but it's better to do that than to try to get in there and just flail away and try to buy some. It's I didn't even hit the price objective of 1710. We got down to 1713. I mean, that's pretty close. Then we rallied $35. One full harmonic number last night up to 1857 was the high last night. We backed off about $22 from that level so far. But we are going to see this increased volatility, and we've got to manage our risk. That's the whole thing. Marshall's dropped in the den here. He's asked a question: which is more important, price or time? Folks, I believe that the old masters, Jesse Livermore, talked about it, and W.D. Gann preached about it, that time was more important than price, because when it's over, it's over. It doesn't make any difference what the price is. It'll either go up or down, big time. But to find that elusive thing of time, I've spent a lifetime looking at it. The Bradley model and a few other little things that we've seen get you pretty close, but you're never going to get perfect, folks. That's why the only thing we can work with when we're trading this stuff is the amount of money that we have at risk at any one time. And that's the real key, is to focus on that risk, because I don't know what the time is. I've never said that I do. I don't think I'll ever find it to any degree of any close to 90%. I'm happy with 51%. Because I control my risk as best I can, and if I can do that, I know I've got a big edge over those that don't do that. So that's my opinion of what I'm looking at here. Now, whether that means anything or not, I really don't know. So let's just take a look here at a couple of things that from Friday that I think are very, very important. We had this big move Friday. If you'll notice, we went. Big move down on Friday. We went up to the 38% retracement. We hit that thing 4 times. We've hit it twice last night, and we're still there. I believe we could easily go up and make the 38.70 to 38.80 today on a really bullish day. Getting back everything that they'd lost on Friday, which is good. But if we take out that low, and that low that we made down there, just a little below 3,800, that was 1 standard deviation from the high. And that's when the option players come in and really have to defend their positions. And that's what happened in that last hour last night. They got into a big problem that if the market would have gapped down today, they would have been in big trouble coming in Monday morning to cover those positions. So that's why it's held that level, in my opinion. But we'll see. I'm still thinking the low of the week, sometime this week, today, tomorrow, the next day, Friday, will be down around 36.80. If we get above 39.20, this is all wrong, and it is not going to go down right now. It's just going to go down at a later time. But the key level, of course, today to watch is the 38.72 in that E-mini S&P. So those are the things that I'm watching. Now, remember, folks, this market is the NASDAQ that used to be the leader is no longer leading. And the S&P is no longer leading. The Dow Jones over the last week has been the leader of the pack. That's why when we got the sell signal in the Dow at 31,960, that was a perfect pattern. You had a perfect ABCD pattern there. You had a 1.618 expansion. You had everything that you could possibly ask for. Now, whether that's going to mean anything or not, we don't know. But all I know is that we're up in an area we haven't seen before. If you'll remember, the last time I was on, I focused on this particular chart right here. This is where we are now. The pullback that we had here last night came right down to just under that, just right above that middle red line there, right off the high. So we're still in a strong uptrend, and we could easily go up and make new highs. That's why you've got to protect yourself to say, okay, what are you going to do? It's going to give you so many chances to get in that it won't. It really doesn't make any difference. Regarding Bob A. in the room is talking about the VIX. The VIX is going to have tremendous volatility here, folks. This is a type of stuff that you dream about if you're a pattern recognition trader, because it hits these numbers just like magic. Now, I've been asked to talk just a tiny bit, and believe me, it's going to be 2 minutes or less, and that is about the Bitcoin and also Cardano. When we did our very first live trading program, we're going to do another one in about 3 weeks here, where we try to make some money for the folks. And we've had 2. They've been a big success. We've done very, very well, made many more times than the value of putting up the money. But if you take a look here is the price of a Bitcoin. We had a high of 50, right at 58,000. We backed all the way off to 42,000. Folks, that's nothing. Look what it's done here. On a percentage basis, that's what's been going on all along. And the support that we came down to right at that 42,000 was really very, very important. That was the old high that it made back on January the 8th, Elvis's birthday. Shut the front door and raise the rent. How could you miss that? When you talk about timing being important, Marshall, there's your answer. So if we go below 40,000 in the Bitcoin, that'll be the first signal that we're probably going to have a little larger correction. But when you go from 3,000, where we were, last year at 3,100, when that was at the 38% level, okay, to where we are now, I mean, that is really not very much. Now, regarding Cardano, when we did the show which was about 6 months ago. We were looking at 6 cents, and it was just a 61% retracement. The high had been $1.20, and it backed off to 6 cents on the log chart, and the risk there was 2 cents. So I said, "You risk 2 cents? I mean, 2 cents. It's got to be 2 cents worth." That's trading for $1. I think it was $1.50 over the weekend it hit. So if you're in that to me would be that would be a done trade. So I don't know where it's going to go. Take some of it off the table. Hey, do I have any of it? No. But and that stuff's not easy to buy either. But those are the reasons why we're looking at some of these things. So I certainly hope it helps. Due to as far as we're looking at the patterns, it's not about how much money you make, folks. It's about how much money you don't lose. So let's remind ourselves that, because it's a very, very important fact to remember as we go through here. We got a break coming up here, 877-927-6648. If you have any questions, and we'll...
Hi folks, this is Tom O'Brien. The printing presses are working 24 hours a day, 7 days a week. The U.S. deficit has risen 200% in 1 year with no end in sight. The markets are looking for an additional stimulus bill to get us through this once-in-a-generation pandemic. There is no free lunch, folks. The more stimulus dollars put into the marketplace, the less your dollar is worth each and every day. This is the time to protect yourself with a portion of your portfolio in the metal market. The Gold Report comes out each Monday morning. I bisect and dissect the dollar, silver, gold, the XAU, and the HUI. The Gold Report is a long-term hedge against the dilution of your buying power. The U.S. has put more than $6 trillion into the marketplace in the last 6 months, with more expected in the next few months. The market did and does need the stimulus, but it will have long-term implications on our buying power. The Gold Report comes with a 30-day money-back guarantee. Go to TFNN.com and order the Gold Report now. Protect your buying power. Order the Gold Report now.
You could be making money off the stock market. And if you're already making money off the stock market, you could be making a lot more. Check out TFNN and Tiger TV and get expert investing advice to give you the power to control your financial future. Go to TFNN.com and find the newsletter for you. Whether you're into trading gold, metals, futures, currencies, or options, you'll get advice and analysis to help you seriously get ahead. TFNN also features trading services with a 30-day money-back guarantee for new subscribers, as well as TFNN's Tiger Den trading room, trading software, and educational webinars for all trading levels. And make sure you check out Tiger TV for free on TFNN.com or TFNN's YouTube channel for live financial content from 8:30 a.m. to 4 p.m. Eastern on market days. Stop watching on the sidelines while other people get rich and become the investor you were born to be. TFNN, educating investors.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Okay, we're back, folks, and before I talk about this British pound chart, we have a program tomorrow with Basil Chapman. He's going to do a webinar, folks. He's going to be talking about the similarities between 1920, and he has the best historical perspective of anybody I've ever met. If you're really interested in what happened during that time period, you really should pay attention to him tomorrow because he's got some great information on it. I'll be there. And I certainly hope that you will be too, because he's really, the historical perspective of it is really great. The skyscrapers, the movie industry, and I see now that the movie industry is pretty much going by the wayside. I guess the cinemas are going to be a thing of the past pretty soon. So we'll see what's going to be looking at. He has some great pictures involved with it and some great stories. So try to join Basil tomorrow. It's worth every penny, folks. It really is. Okay, now, I've had several questions about the British pound. We had a trade last week to sell the British pound at the 140.80 level with a stop at 140.120. We're risking 40 pips or $240. And as you can see, that thing exploded, went all the way up to 140.250. When that happened, I sent a video out with describing what I thought was going to happen next. And what I said to the folks was, look, wait for the first 61% retracement or the first ABCD pattern that you can see clearly on a 15 or 30-minute chart, and use your judgment there as to whether you want to get into it, because you don't have to risk more than 60 cents. So that's one of the things that you want to keep a close eye on. Hold on here one second. I'm trying to see what's going on. Oh, well, wheat's breaking down again. Oh, we got a nice move up here in the stock market. Good. We're up another several hundred points. That's what we like to see. We're getting up to that 38. We just hit it, 38.62. The high has been 38.66 in the S&P. So that's going to be another one that will be interesting here to pay attention to as we look at here this morning. So we're at 13,364, it looks like, here in the Dow Jones. Boy, covering that at 31,200 certainly was the right thing to do this morning anyway. Okay, now if we move on to one other thing that we want to do is to just a second, folks. I have to turn off the alert on the wheat because we've been short wheat here a little bit on a shorter time frame, and I want to make sure the thing's beeping so darn much. I have to turn it off, otherwise it's going to drive me absolutely crazy, which is a very short trip, by the way, but I want to turn it off. Hold on. Where are you, wheat? Come on. There we are. Nope. Where is it? Doggone it. Oh, dear. Hold on. Where is it? I got so many things in the hopper now. There we go. Okay, turn that off. All right, we're off to the races there. Okay, now that takes care of that. Now we want to move up to there we go. Look at soybeans breaking too. This is good. We had a nice retracement last night in the soybeans up to the 61% retracement, but it was in the middle of the night. I missed it. By the time I woke up this morning, it had already broken about 8 cents, and now it's broken another 20 cents. So we've had a pretty big reversal here in some of these grains. So pay very, very close attention to this. Remember, folks, we have a bifurcated market here because the NASDAQ's not even close to making new highs from overnight. We're still about 80 handles under that, whereas the Dow Jones is strong with those 30 stocks, and then also the S&P is very strong. The absolute line in the sand here now on this S&P is that if we get much above, let me give you the key level here, if we get much above 38.85, then that low that we made Friday night is a monster low. And we certainly have to put that in the hopper as saying, wow, we got to pay very, very close attention to that. But 38.85 would be the number I'd be watching today with this. But we got the Dow up, I think, well over 400 points today. The buying's coming in quite strong in the Dow Jones stocks, but not so much in the NASDAQ, but they're still coming in the S&P also. Okay, let's move on here. I want to talk just a second about the crude oil, because we had a top up there at that almost 6,400. We backed off about $1.25, well, $2.50 from there. We're going between those numbers, so we just have to wait and see, what's going to happen with this as we go through the morning here to see if we're going to get above the 62.50 level, which is the key level in the crude oil to pay close attention to today. So those are the main ones that I'm watching. The next one I want to cover, of course, is the U.S. dollar, because I believe that the the market is actually the bonds are moving pretty good now. We've got them back up strongly on the day here, but we're just making a normal ABCD correction in the bonds. I'm going to do the bonds right now because that's a really big one to pay attention to here, folks. Hold on one second here. By the way, that British pound that fell off fell below the price objective, went way below 140 down to 138 and change. So those are some of the ones that we're paying very, very close attention to here this morning. Okay, now I need to get the bond chart up here. So if you'll give me 1 second, I have to. I got that bond. Where did I put it? I did so many charts for this show today that I can't remember which one of these bonds I put up. That's the darn thing I do so many of them, I just can't do it. Hold on. Where are the bonds at here? There. And this is what I want to see. Okay. Here, two of them you want to watch here because one's really important. This is what we had last night, folks. We got down this last week. We went down to that 150, broke 158, went down to 156. We're trading around 160 right now. That is a very important number, but let me show you the one that really has everybody's attention in the old Pueblo, and that is in the TLT. So if you'll give me just a second, I want to bring the TLT up to you to show you to what it really looks like here on a long-term weekly basis, because this is hold on one second here. I got this messed up a little bit. There we go. Hold on. There we go. Here's your TLT. This is a daily. You'll see what happened on Thursday. We hit the spot on 61% retracement of the low that we made way back 2 years ago, folks. And that's where we hit it. And we have, look at the volume that it did, folks. Second highest volume ever, other than the March high that made up at 180. That's where the highest volume occurred. And now we've had the second highest volume occurred at this low at the exact 61% retracement. Now, we've been looking at the downside in bonds for a long time, and now it is starting to look like the bond market has a few friends coming in, not many as of yet. The open interest has not been very helpful because with the prices down sharply, there was increases in open interest, so people are still pressing. But by golly, I wouldn't be pressing bonds from here because that's where we're watching, where we want to keep a close eye on some of the things that we're paying a close attention to. We got the Dow up, 475 points. The NASDAQ's up 142. The Dow's up 53. So we're rocking and rolling. So that's a good one to pay attention to as we go through and looking at some of these things today. But that is extremely important, folks, that weekly chart in the Treasury bonds and also in the TLT. That's a big 61% retracement. We have been talking about the fact that we didn't believe in negative interest rates, but this is a spot where they can rally. We'll be right back.
Are you in the market for buying or selling real estate in the Bay Area, including the surrounding St. Petersburg, Tampa, and Clearwater markets? Tiger Real Estate LLC is a firm that has extensive experience in the Tampa Bay area. Whether you're looking to sell your current property for maximum value, or you're in the market for a second home or investment property, Tiger Realty has the experience across all areas of real estate in the Tampa Bay area to help buyers and sellers make the most informed decisions across all price levels. From the price you should be paying per square foot in certain up-and-coming areas to the type of cash flow investment properties are capable of creating, Tiger Real Estate can help you make the best decision when it comes to all areas of the market. Before you make one of the biggest decisions of your financial future, call Tiger Real Estate LLC today at 727-329-8322 or email us at tiger@tfnn.com. That's 727-329-8322. Call us today.
Back in the day, I joined Hotel California in 2006, and like many of you, was drawn in by, as well as...
Whatever you think about, you bring about. Whatever you focus on grows.
You see, I believe that everything in life happens for us, not to us. And Tom ignited the fire within me to want to learn how to master the markets. So how did I go from knowing nothing about technical analysis to becoming the #1 market timer for the S&P 500 in 2018 and the #2 market timer in 2019? Simply put, I hired coaches with a proven track record, which led me to a whole new set of tools that I created to interpret the message of buyers and sellers. I would love the opportunity to teach you this award-winning set of tools and to help you improve your market timing. You can test drive my newsletter service, Mastering Probabilities, for the next 30 days with no risk to you. Plus, you'll gain access to archive workshops that'll take you step by step through my system. Sign up today by going to the homepage of TFNN.com and selecting Mastering Probability in the newsletter tab.
Will the S&P 500 continue to climb? For bold trades on U.S. large-cap stocks in either direction, trade SPXL, SPUU, or SPXS. Directions Daily S&P 500 Bull and Bear Leveraged ETFs. Direction Leveraged ETFs. An investor should carefully consider a fund's investment objective, risks, charges, and expenses before investing. A fund's prospectus and summary prospectus contain this and other information about Direction shares. To obtain a fund's prospectus and summary prospectus, call 866-476-7523 or visit directioninvestments.com. A fund's prospectus and summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
The Bull Bear Trading Hour with Tom and Tommy O'Brien. Next.
Okay, folks, we have Mr. Z on the line. John, how are you this morning?
Good morning, Larry. Glad you gave yourself a little rest, so to speak, last week.
It was rest from the show, but I enjoy this stuff so much, John. If I'm away from it more than 20 minutes, I think I'm addicted to it. But I've been doing it for so long.
You can check in, but you can't check out. I do understand that.
I know you're the same way.
A big thank you for back on to you and some of your guests back on the week of, that was Monday, February 8th, in which you were sharing, you personally, that astrological cycle that was due February 11th, and you shared back that week the transit charts that you use or you get from a couple of your good, reliable colleagues of March 9th, 2009, and then Feb 11th, 2021. And, just by way of history here now, the S&P and the NASDAQ rallied into Friday the 12th, one day removed from that Feb 11th dates. And that has been, on those cash indices, that has been the closing highs thus far. So from the perspective of that particular cycle, I'd have to conclude February 11th, that cluster on that transit chart was a bullseye. So you shared that in advance, and I was doing my own work. That led me to be well equipped and well prepared to trade successfully on the short side the week of Monday the 15th, and then last week the week of the 22nd. Anyway, we've had a nice decline, particularly in the NASDAQ. And, of course, as you pointed out, the Dow and the New York Stock Exchange actually made higher highs Wednesday of last week. That was, Wednesday the 24th. Looking ahead, besides the 1st of April date that you displayed earlier coming off of Shane's work on the Bradley model, is there anything that you can point to in the next 30, 60, 90 days as a time cycle or astro cycle that you think is important?
Well, the only one that we talked about earlier in the show that I posted was the Bradley, and that comes in on the 28th of March. That's the only one that I can see. Now there's some lunar cycles that come in. We just had a full moon. We got a new moon in 14 days, so we'll be able to take a look at that. So those are the only ones that I look at. John, you know this as well as I do. Time is so elusive, and the only thing I can do is look at the patterns. That's my pathway to where I think things are going. Sometimes they work, sometimes they don't. But, when I'm watching them, at least I have a pretty good idea of what I think is going to happen. I don't know that it's going to happen, but I think it's going to happen. And that's why I try to think of myself as Mr. 51%. I only have to be right 51% of the time, because if I keep my losses relatively small, I'm going to be okay in the long run. I'm going to have a strings of losers, strings of winners, but overall, I know that the probabilities are there on the ABCD patterns, that look really, really interesting. Now, I will post this chart here. This is one that sets this up from a perspective of time, and I don't know if it's going to mean anything or not, but it's with the S&P. We made that 3 drive to a top pattern, the expansion at the 1.618 at 39.35. We're still 60 handles under that, and you can see where we closed on Friday, 38.07. I was assuming that by the 21st of March, we should get down to this 35.55 level, which would be equal to what we did during the September-October time period when we had those sell-offs. So that's what I look at, my friend. I keep it as simple as possible. Time is way past my pay grade. I see glimpses of it. But, we have some great guests that's given us some, great time. Mr. Winsky's given us some, Shane, Tim Bost, even Arch Crawford. Some of them have some really good spots that you have to pay attention to. So that's all I try to do is to match the pattern with, what the risk is at that point. How much do I have to risk to see if I'm right?
Exactly right. I'll just add in this conversation something I found useful, and that is when of course, I always start with the S&P and do the pattern and fib calcs and retracement levels and expansions, that sort of thing. But then since the Standard & Poor's 500 is in effect half the NASDAQ 100 and half the top 100 NYSE names, I look at those two indices, the NYSE and the NASDAQ, independently. And, of course, in the past year, in the past month, and the past week, the NDX, the NASDAQ 100, and the NYSE Composite are totally distinctly different patterns because, they just are. And one observes some interesting things that are separate and distinct between the two, and that helps me get a better basis and understanding of the S&P and the E-mini futures. Having said that, I'll just observe the NASDAQ 100 dropped, 1,200 points off of its high February 12th. It's now bounced back 400 points already, so we're 200 points more to get halfway back. Be my suspicion this NDX 100 index set a top, made a good decline, and probably is prone going forward to likely make lower lows somewhere out in time, lower lows than last Friday, that is. So, of course, that observation is free and is probably worth only that, but I share that, and thank you so much for the assistance you give all of us. It's greatly appreciated.
Hey, Bubba, it goes both ways. The trades that you post here in the Tiger Den they're classic. And the way you describe them and how to do it, it just shows the folks that if you just focus on one or two things and do it right, you can do pretty much the right thing. I mean, John, you have nailed the copper market. You've nailed the grain markets. You've just been doing a fabulous job here for us. And so, keep up the good work. And folks, if you don't think he's good, why don't you just go in the TFNN Den and try it and look at some of the trades that he does. I mean, I watch him, and they're just they're amazing, and they're before they happen. I mean, it's not retrospect. I mean, that's the key to what we're paying attention to. So let's remind ourselves of that. So thanks for joining us, John.
Good trading to you this week, my friend.
Yeah, you bet.
Okay, bye now.
You bet. Okay, I think we got a break coming up here pretty quickly, and then we'll be watching some of the other things that I wanted to bring to your attention. But remember, folks, that the NASDAQ is no longer leading the market. It could change today. If we get above 13,400, that could certainly change. But it's going to be interesting to see what happens. So we'll be right back. 877-927-6648.
The reality is that navigating financial markets can be risky. Markets can be chaotic and difficult to understand. Having the latest market advice can help you turn this chaos into a key for creating winning trades. At TFNN, we understand that it can be hard to find reliable market news. That's why each of our market experts offers their very own market newsletter. A must-have tool for every trader out there striving to find an edge in today's markets. TFNN newsletters cover every aspect of the markets so you can analyze the market before you trade. Try any of our great newsletters risk-free with our 30-day money-back guarantee. Just visit the Newsletters tab on the front page of TFNN.com. TFNN. Educating investors.
Hi, folks. This is Tom O'Brien. The printing presses are working 24 hours a day, 7 days a week. The U.S. deficit has risen 200% in 1 year with no end in sight. The markets are looking for an additional stimulus bill to get us through this once-in-a-generation pandemic. There is no free lunch, folks. The more stimulus dollars put into the marketplace, the less your dollar is worth each and every day. This is the time to protect yourself with a portion of your portfolio in the metal market. The Gold Report comes out each Monday morning. I bisect and dissect the dollar, silver, gold, the XAU, and the HUI. The Gold Report is a long-term hedge against the dilution of your buying power. The U.S. has put more than $6 trillion into the marketplace in the last 6 months, with more expected in the next few months. The market did and does need the stimulus, but it will have long-term implications on our buying power. The Gold Report comes with a 30-day money-back guarantee. Go to TFNN.com and order the Gold Report now. Protect your buying power. Order the Gold Report now.
Introducing Primal Edge.
Today, it's even more important to take a supplement that complements your health. Primal Edge is specifically formulated to boost your immune system and help with weight loss, better sleep, stress reduction, and the need to detox.
Our early ancestors found all their nutritional requirements in the wild environment. But today, our food sources don't contain the vitamins, minerals, and nutrients that we need to stay healthy and strong.
That's why we need Primal Edge Daily Nutrition. It includes a special blend of ionic, soil-based vitamins, minerals, fatty and amino acids in an easy-to-use liquid form.
Primal Edge is powered by highly concentrated humic and fulvic acids, nature's preferred delivery system. They've been called miracle molecules because, like sunlight, air, and water, without them, life cannot exist.
That's right, Ellen. They ensure we receive all the nutrition we need to be healthy and thrive. We take it every morning.
Primal Edge. Just $89 exclusively at TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Okay, we're back, folks. And hold on one second here. Our guest tomorrow will be Tim Bost, Financial Cycles Weekly out of Florida. And then on Wednesday, we're going to have Shane Smolian will be our guest on the 3rd. So that'll be pretty good to hear what those folks have to say. We're getting very, very close to the 61% retracement of this last move here at 38.77 in the S&P. We're at 38.69. If we get above 38.90, we're probably going to make a new high, folks. That would be my guess. So the main thing is that that low that we made there on Friday was spot on, one standard deviation. And the fact we couldn't open lower Sunday night was the first indication that there was something amiss. We were certainly alerting ourselves to that. That's why we lowered the stops down quite a bit. Probably should have lowered them more in retrospect, but you can't do in hindsight. That's the main thing we're watching. We're still waiting in the gold market, folks. We're going to wait this week. We will be buying gold this week. The question is whether we will do it at a higher price or closer to that lower price that we're looking at, which is at 16.73. I didn't get too much time to cover the U.S. dollar. I will do that on tomorrow's show. I sent videos out on it, of course, because we've had huge moves in the Australian dollar and the Canadian dollar, the euro, the pound. We're having big moves there, and those are ideal situations of what we're trying to see here. So this will be an interesting day here to see how we're going to end up. But every day is interesting, as they say in the trade. So let's remind ourselves, folks, that these someone's just Skype something in the cryptocurrency. I have no idea, folks, whether these things are right, wrong, indifferent, whether they're any good or not. I'm just looking at the chart patterns. I don't listen to the news or what people are talking about it because I don't understand it, and so that's the skinny of looking at it. So I don't know any other way to put it other than to pay very, very close attention to it. So that's all we can do. So live every day in an attitude of gratitude, and may God bless. And be sure you help your neighbors out, folks. There's a lot of folks out there having a lot of trouble, and it's 35 degrees here in the Pueblo today. It is cold. We'll be right back tomorrow.